Hi, welcome again to another edition of Market Analysis for today, Monday, June 23rd, 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets right about an hour prior to the USA session open. Well, the calm after the storm or just a lull. Early Monday, trading was surprisingly tranquil after the US struck Iran's nuclear infrastructure over the weekend, backing up Israel's initial attacks on the country, but it might be a logical reaction. Iran's most powerful option to strike back will be to blockade the Strait of Hormuz, through which around 30% of the world's oil flows, likely propelling crude prices above 100 a barrel. However, such an action will be more damaging to Iran's own economy and that of its biggest oil customer, China, than to the US and also Europe, obviously, China and Europe. Now, that calculation accounts for the muted reaction in oil markets and safe haven assets such as gold. The markets seem to be betting both Washington and Tehran will step back from further escalation, this regarding President Donald Trump's musings on potential regime change in Iran. Still, there are plenty of unanswered questions. Was Iran's nuclear enrichment program truly obliterated? Will Israel step up its own actions? Could Iran opt for partial restriction of oil shipping rather than a full blockade? That uncertainty could mean the Federal Reserve will hold out against pivoting to rate cuts as higher oil prices will drive inflation, despite pressure from the White House to lower interest rates. Fed Chair Jerome Powell will have to defend that stance in congressional testimony tomorrow and Wednesday. The debate will also be influenced by Friday's publication of the core PCE price index, the Fed's favorite inflation gauge, which is expected to rise 2.6% for May from the previous year. The market has gotten used to shrugging off geopolitical tensions in the past couple of years. It's a pattern that's still holding, and investors might be right to focus on concerns closer to home. So with that being said, let's take a look at what the markets are looking for today's market fluctuation, their behavior for today. So looking at this daily candlestick chart of the NASDAQ, we see how the market did open gap down today, but it's looking as is recovery, right? So the market opened gap down substantially. It opened at 21,634 from where it closed on Friday. So that obviously is looking at a recovery. So that will have to bring our level of support lower. So let's use previous week's low. So that was on the 16th. And then that swing low from the previous day. We have the 20-day moving average with the medium of the Bollinger Bands right up below the market. So 22,000 psychological value initially for the NASDAQ and the up Bollinger Band. Now, will we see a recovery? Will Americans come in and hold the market? Is valuation close to 22,000? Will fluctuate towards that level? That's what we're gonna come in and speculate today. So I'm gonna be bullish and looking for potential buys, entry buys. So we have the S&P also gap down. So let's use the same those previous swing lows. And 60/40, which was basically rejected in the top Bollinger Band, which almost coincides with Friday's swing high. Then we have the Dow. The Dow didn't open as such a gap down as the Nasdaq and the S&P. That's quite interesting. So let's use 41,900-ish, second level of support. And then as far as resistance goes, let's use 42,700-ish. And then this area here. Crude oil opened strongly with a gap up as high as almost $78, but quickly it retraced. So we have basically a this movement obviously is just going to be because of that knee-jerk reaction after the United States doing what they did over the weekend. So let's just use 75 and 76 as possible levels of resistance. And as far as support goes, let's use 72 and 71. I mean, pretty wide range for crude oil initially here. I mean, we could use 73. We could do that. Let's use 73. Let's see if we will be able to find that support around 73, and then use $72 as our second level. So anything that comes out of Iran that is they're blocking that Strait of Hormuz will be bullish for crude oil. Nat Gas, it didn't open with such a strong gap up. It did open gap up, but it has been closed, but it continues to do a low momentum. So the trend seems to be in a sell-off mode so far. So I'm going to be using these levels. Use 390 and then Friday's opening. So as far as Nat Gas goes, we're looking to sell. Gold also, it opened gap up, but not a strong gap up though. So let's just use 3400 as a psychological round value, and then the upper Bollinger Band. As far as support goes, 3340, which is Friday's swing low, and then 50 moving average as levels of support. I'm going to speculate that gold will climb back up and be within last week's range. Then we have silver. So silver also open with a tiny gap up. I'm just going to tighten up my support level to the moving average. And then second one is $35 psychological values. So I'm going to leave the same levels of resistance we have last week. Let's see if there'll be a recovery day today. Copper, it opened gap down instead. So we have copper right below, so far the price is right below. It did fluctuate above the 20-day moving average, the medium. But let's see if it'll be able to sustain that move higher, or will we come and just do a fluctuation to the downside. I'm going to tighten up the resistance level, trying to touch as many wicks as possible. So touching 3 wicks, and I'm going to leave for 88 there. So let's see. Bitcoin did made a swing low, or quite a strong sell-off. So $98 initially for its first level of support, and then 97. So you see, it's looking to recuperate itself. So 103,000 is going to be our first level, 103-ish, and then the 50 moving average. So let's see how much more of it recovered above 100,000. So I'm thinking it's gonna, I'm speculating it's gonna hold up above 100,000. So the euro opened gap down substantially. I'm gonna leave the 20-day moving average as a possible level of support, and 114 psychological value. I'll leave the same levels of resistance, seeing if the euro will hold its value north of 114. The pound did open quite substantially gap down. That has been closed. Now, will the trajectory continue to move lower? Well, the RSI is below 50, so implying that the momentum to the downside is picking up. So 133 can be my second level. As far as resistance goes, I'm going to use 134.5, which is almost the swing high of today, and then the 20-day moving average. Now, this movement lower will continue if we continue to see that the dollar index continues to move higher. It did open gap up, strong gap up. So I'm going to use a 50-day moving average as my first level of my level of resistance, and then support is going to be basically the open around the open of Friday, which was almost also the close of Thursday. All right, that's it for me today. Have a great trading day. I'll see you tomorrow.